All right, let's get right into it. If the market has handed you some crypto losses this year, you might actually be sitting on a really valuable tool. We're going to break down exactly how to turn those red numbers into a major win for your tax bill.
So, this is probably the big question for a lot of you. You've seen your portfolio take a hit, and yeah, that's frustrating. But what if all that frustration could be turned into a real, tangible financial benefit? What if the loss itself was the opportunity?
Well, that's exactly what we're going to cover. I'm going to walk you through the concrete steps you can take to strategically use those losses to lower what you owe. And look, this isn't some kind of complex financial wizardry. It's just about making smart, documented moves. And this right here is the magic of it. It's a strategy called tax loss harvesting. It lets you realize a loss for tax purposes without actually having to change your long-term investment position. So you get to bank the tax savings right now, but you can keep the exact same market exposure you want for the long run.
Okay, so the key that unlocks this whole thing is a method called specific ID, or specific identification. I want you to think of it like your personal control panel for your taxes. Instead of just letting the default settings decide your fate, you actually get to take the wheel.
So let's compare. The default for most systems is FIFO, first in, first out. It just automatically sells the crypto you bought first. Now, if you bought that crypto super cheap, selling it could actually create a taxable gain, which is the last thing you want. But with specific ID, you choose. You can go in and pinpoint the exact coins you bought at a higher price, sell those to capture the biggest possible loss, and leave your low-cost winners completely untouched. It is a total game changer.
But here's the catch, and it's a big one. Specific ID is incredibly powerful, but it has one non-negotiable rule. You have to have contemporaneous proof. That means you need to document your choice at the time of the trade. You can't just go back months later while you're doing your taxes and decide which lots you sold. It has to be done in the moment.
Which brings us to probably the most crucial part of this whole thing. If you want to use specific ID, you have to create what we're going to call an airtight proof packet for every single one of these trades. Now, it's not complicated, but it is absolutely essential.
And seriously, you can do this whole thing in about 60 seconds. First, you just go into your exchange and enable tax lot selection. Then choose your high-cost lots. Second, you screenshot that selection screen, make sure the date and time are visible. Third, you hit sell and immediately export the confirmations. And last, just write a quick 2-line memo for your records. That's the workflow. It's simple and it makes your choice undeniable.
So, to be super clear, your packet for each trade needs to have these 4 items: the screenshot from before the trade, the fill confirmations from after, a CSV export with the transaction IDs, and your simple memo. That's it. With this packet, you've built an absolutely ironclad case for your tax return.
And really, this quote says it all. At the end of the day, it doesn't matter what you intended to do. It only matters what you can prove you did at the time. Your preference for a better tax outcome is totally irrelevant without the records to back it up. Plain and simple, no proof, no specific ID.
All right, so now that you've got the proof part down, it's really important we talk about the rules. Especially for our international viewers, tax loss harvesting is not a one-size-fits-all strategy. The rules can change dramatically depending on where you file your taxes, so you've got to respect the local calendar and the local regulations.
Okay, let's break this down. In the United States, like we've been saying, specific ID is everything. And, for now at least, there's no wash sale rule for crypto, which is a huge advantage. Now, over in the United Kingdom, you have to watch out for the 30-day bed and breakfast rule. If you sell for a loss and buy back the same crypto within 30 days, that loss gets wiped out for tax purposes. In Canada, it's a similar idea with the superficial loss rule. Repurchase within 30 days, and the loss is denied for now and just gets added to your cost base, or ACB. And finally, in Australia, they're looking for commercial substance. That means your trade can't only be for tax savings, it needs to have a legitimate investment reason behind it too.
So, after all that planning and documenting, what's the actual payoff here? Well, it's about turning a loss on paper into real, cold, hard savings that you can see on your tax return.
For anyone filing in the US, this is the magic number. After you've used your losses to cancel out any capital gains you might have, you can then deduct up to $3,000 of whatever's left against your ordinary income. And yeah, we're talking about your salary from your job. That directly reduces the income you pay tax on, which can literally put hundreds of dollars right back into your pocket. And just a quick but important note, that limit is cut in half to $1,500 if you're married and filing your taxes separately from your spouse.
So you might be asking, well, what if my losses are way bigger than $3,000? That's where another huge benefit kicks in. Any loss beyond that annual limit is not gone. It gets carried forward to future tax years indefinitely. This means a big loss you harvest today could keep reducing your taxes for years, maybe even decades to come. It doesn't expire.
So really, this whole strategy boils down to these 3 simple, powerful moves. Number 1, choose your lots on purpose using specific ID. Number 2, document every single step like a pro. And number 3, respect your local tax deadline and rules. You get these 3 things right, and you're golden.
And look, you can get started on this right now. In the next 15 minutes, seriously, you can figure out a rough target for how much you want to harvest. You can log into your exchange and flip the switch to enable specific ID. You can create that trade packet folder on your desktop so it's ready to go. And you can set a simple calendar reminder for 10 days before your tax year ends so you don't forget. These are all things you can do immediately.
Ultimately, it just comes down to this. The market is what it is. It's unpredictable, and it dealt the cards that resulted in a loss. But what you do next, that's 100% up to you. You now have the playbook to take control and turn that loss into a deliberate, documented tax saving. The choice is yours.